Hi all, myself Jefrin Johnson from the Department of Commerce, St. Albert's College Autonomous, Ernakulam. So in this session, we will be dealing with Memorandum Debtors Account. So what is the need of Memorandum Debtors Account? This is basically, we need to find out, sometimes there are instances where we need to find out what is the closing balance of debtors, or what is the amount which we received from the debtors, or we need to find out what is a credit sales, or sometimes there may be a situation where we need to find out the open debtors, or any other figures which is related with the debtors, which we can find out with the help of memorandum debtors account. So this is a format of memorandum debtors account. Basically, this is a debtors account. You could see here that we are writing the opening balances, the two balance brought down. There we will be writing the opening debtors. Opening debtors which we will be having it in the opening balance sheet. So this item will be coming over here. Then we will be writing the two sales, credit sales, basically the credit sales. By this entry only the debtors are being generated. The entry will be debtors account debit to sales. Debtors account debit to sales. With that entry we are creating a new asset named debtors and an income, the sales. So, and this is a credit sale, we are not receiving the cash. That's the reason we are having this debtors account. We are making a sale there, but we are not receiving the amount. Who will be giving us money? That person will be writing it as a debtors. That person will become an asset. So debtors account debit to sales. So that's the reason we are writing the credit sales here. We are not writing the cash sales. Why? If we are getting the cash at the time of sale, then there won't be any debtors. The debtor account, a personal account named debtor account, arises only because of the fact that we are not receiving the money at that moment. When we are not receiving the money when the sale takes place. So if the sale takes place and if we receive that money, then we will be calling it as a cash sales. Here we are writing it as credit sales because we are not receiving the money. So these are the two items which will be coming in the debit side. So one is a previous debtors and the other one is new debtors. So I could say it like that. The first item is from the previous year we were having some debtors. We can see that value here. And this year we are generating some more debtors. That amount can be seen over here. Then coming to the credit side we will be having by cash received from debtors. What does that mean? These debtors, they are actually giving us some money back. So that will be shown it over here in the credit side by cash received from debtors. Next, the debtors, even though they had made a sale, they are returning it. There can be a defective goods which we had given to the debtor, and that debtor want to return it. Such an item will be coming over here, sales return. So which means the debtor has to be reduced. That's the reason we are writing it in the credit side. Again, due to their prompt payment and due to retain our customers, we are giving some discount to these debtors. So they need not pay the entire amount to us. In that case, we will be giving a discount, and that is being shown over here. Discount. We are giving a discount, which means this is an expense for us. The business, for the business or for the businessman, we will be having, or for the company, we will be having a discount. So that is a reason. Discount allowed. It is an expense for the company. And thereby we are writing it in the here we are writing it in the credit side. Actually the entry is discount allowed account debit to debtors. Discount allowed account debit, which means discount allowed has a debit balance, which is because it's an expense. Discount allowed account debit to debtors. Debtors are being reduced. Debtors is an asset and it is being reduced. That's the reason the debtors account is credited. So it is credited by discount allowed. You are writing that amount. Next item is some. Of course, we know that debtors won't pay us back fully. So here the battered portion we need to write it over here. What is the battered portion? We will be writing it over here. And the balancing figure which will be coming over here, which is we will be writing it as balance carried out and we will be totaling it. The highlight of this memorandum debtors account is that if any missing figures are in the question, for example, while we prepare the branch accounts or while we are preparing the single entry also, we can use this account to find out some of the missing figures. It can be the missing figure can be the balance brought down. and they had given all other details, then with that details, including the balance carried out, then with that details, we will be able to find out the balance brought on by just balancing it. Same way, we don't know the credit sales. We need to find out that. Then also, other details are given. Then we can find out the credit sales by balancing this account by putting all other entries. Also, in the branch account, basically we are preparing memorandum debtors account for the cash received from debtors, because the cash received from debtors, we need, if they had not given you the details, you need to 100% in that question you need to prepare memorandum debtors account, and then you need to find out this amount cash received from debtors. Then also there can be some issues where we need, as you know, that we need to write the closing debtors in the branch account. So there can be in the question they won't be giving you the closing debtors. If it's so, you need to prepare the whole accounts and you need to find out the balance carried out. That's all with regard to memorandum debtors account. Thank you.